I want to address with you now the issue of the commercials being too early in the market. This is a real good example of it in the gold market. Now, gold was in a nice uptrend, but notice how the commercials became heavy sellers in this area, and the market just simply continued moving higher. They were again heavy sellers, a little bit of a pullback, but nothing of any consequence. And again, they were heavy sellers on this entire rally. Well, certainly you didn't want to sell short at that time period. They were correctly on the sell side here, and the market had a pretty good whack for 6-7 weeks to the downside. But again, they became heavy sellers in this area, and the market simply went higher and higher and higher. Had you sold short down here when they started, you had a gain of about a loss of about $6,000 on your short position. So that's not good. The problem with the Commitment to Trader report is that they get bearish too early and bullish too early. And it really has to do with the trend. Here's another good example. The commercials became heavy sellers here, and the market continued rallying. But notice that at all of the buy signals, the commercials were buying because we were in a nice uptrend and at higher levels. Virtually all of the buy signals produce rallies in the marketplace. So that is the problem with commercials has been resolved then. The problem has been that sometimes they're just flat out wrong. And we can resolve that. We have a solution to that by saying we will only take COT buy signals, commercials long, in an uptrend, and of course the opposite, we will only take commercial selling as an indicator to sell short when prices are in a downtrend. If there is any doubt in your mind at all, pass on the trade, walk away from it. You want to combine the best of both worlds, trend of the market with the commercials beating up selling short a down market or buying long aggressively at high prices. You can see a great example of it there. Market pulled back a little bit at high prices level, higher than we've been for a year or so, and immediately gold rallied. That's the picture perfect pattern, of course. But what it really is a solution to the problem that we've all had with the Commitment to Trader report. So many people are using this report now, not understanding, as you will, as you continue with the seminar series, the importance of using it in phase with trend and also ripping apart, as we've already shown in the Sure Thing commodity trading, the difference between looking at total open interest and the individual participants in the marketplace, large traders, and of course the commercials. The other solution to this problem of the commercials being too early is to pay attention to the large spec traders. As I've talked about, the large specs are the funds, and they are the trend followers and the trend creators. Notice that as gold starts to rally, look what's happening to the large spec position. It also rallies. When gold starts a nice rally in here, though the commercials are selling, the large traders are buying, and it is not until they stop their buying that the market declines. I'm going to open this up a little bit more and get a little bit better view of this. As the large traders are increasing their long position, markets rally. Notice in here the market's going sideways, but the large traders have started to buy, and that kicks off the rally. They then start to get out of the market, take some of their profits, and the market has its pullback. So we need to learn to be in phase with these large traders in the marketplace, because they are the substance or the fuel of the fire. They are part of the trend, and as you will see as we progress further, they also help resolve this problem of the commercials being too early. If we know the commercials, say, are selling in here, but the large traders are still straight up, they're still adding to the long positions, we certainly don't want to sell short here. That's the important point, is to combine the two of these together, the creators of the trends with the enders of the trend. So read your manual closely on this, and you will see how we particularly use the large traders when we look at the large trade proxy index on a daily basis. So you've got the idea of it. You know who creates a trend now? It's the large traders, and we don't want to buck the trend or the large traders most of the time.